that turn the corner in the third quarter? That and more is what we're going to be discussing with the MD and CEO, Vimal Kejriwal, who's joining us. The fine print of the numbers gone by, as well as the road ahead. Good morning. So let's begin with that first question that the street wants to have an answer to. We started to see, of course, a softness in commodity pricing. Can margins turn around from the third quarter onwards?
Good morning. So I think if you look at the reason for the margins drop, there are a couple of reasons for that. One is obviously the commodity prices, as you rightly said. Second is the significant hike in the logistic cost. And third has been our losses in Brazil. So what we have told the investors is that commodity prices have started now coming down. They've taken off actually a lot. And we will start seeing that the benefits of that coming from Q3 and Q4. Logistics have come down, and Brazil, I think Q3 is the last one where we'll be completing all our legacy projects. So Brazil will be off our numbers by Q3. So direct answer is that I think Q3 onwards we'll start seeing a shift in the margins. Maybe not very significant in Q3, but Q4 onwards we'll start seeing a improvement in the margins.
Okay, so you'll start to see the improvement in the margins. You're not going to say it's third quarter. Now you started to take action as well when it comes the acquisition that was made earlier in Brazil as well. But you know, the entire theme, when people talk about industrial goods, capital goods, manufacturing, infrastructure, what is happening on ground? Give us a sense. The order book, we've seen the number that's come in for the second quarter, but going forward, what is that looking like?
So order book is looking great. We had an order intake of more than 10,000 crores till now, which is 25% more than last year. We have a tender pipeline of almost, I'll say, 110,000 crores. These are tenders which have already been bid or under bidding in the next maybe couple of months, etc. It's a huge tender pipeline. We have an order book of 27,500 crores, L1 of 6.5. So I think if you add them, it's 34,000 crores. So on the business side, getting more business and all that is I think pretty okay. We are pretty happy with what we are seeing on the order intake, pipeline, etc. And hopefully now with the commodities stabilizing, I think we should start seeing the better days.
Vimal, let's talk about individual segments. And I can see that the railway segment has actually seen a decline when it comes to about 13%, and margins also have seen a dip. Will pressure continue for the railway business, or do you foresee now some visibility of an uptick?
So railways will definitely grow this year. What had happened and why you're seeing a decline is last 2 years our order intake had been roughly around 2,500 crores each, and which is what contributed to this decline. This year we have already got orders of more than 2,500 crores. So whatever we had done the last 2 years, every year we already got this month, and we already are L1 in many tenders. So railways will definitely pick up. I think the second reason is that with the elections looming in 24, we're also seeing a lot of new projects coming up on the civil side, in the sense of doubling of tracks and tripling of tracks, which had not been there for some time. So clearly we are seeing a lot of spend happening on the conventional rail side also. So I think railways, we are now very clear that H2 will be very, very good for railways, and also next year.
All right, we'll let you go on that note. Appreciate your time. Thank you for taking time out and joining in with a view on KEC International.